Welcome to TradeTheNBA.com. This is John's report is for the 20th of January. Well, we get a continuation of the short signal that took place once the DOC spread, which is the cyan moving up here, and that separation became larger. We were expecting weakness. Figured that we would get a decent hold of the 50% range as long as the magenta stayed above yellow, but when that collapsed as well, we just got a little bit of continuation of it now hitting down to the 38%. Not a significant enough spike of weight to really suggest we're going to, get an implosion that could build over time. But I thought a white spike early would have signaled another significant move day. So it looks like it's going to be a little bit slower process. Short-term buyers here from the DOC kind of prop things up enough just to hold on to that support. But it's really not an attractive look. And we talked about this the other day before we hadn't had the dip below the red line. We now have it. So certainly we can see some more continuation in there. And we'll be watching that orange, whether we get a direct pivot lower for a turnaround or if we get one of these where it stays in the middle back in October in that last year where you're just in a continuation mode. So we will play it per what we get signal wise. But for now, still weakness abounds. Doesn't mean there aren't going to be some positives within that. I think the short-term buyers can certainly do enough to lift it. Nasdaq, identical, same 38%. So now they're sort of become congruent as far as S&P and Nasdaq, and that's helpful, but it also could be more precarious because if they're both signaling short, before the Nasdaq was performing a little bit better, relatively speaking, it had underperformed dramatically, but now they're sort of in parity. Treasuries is craziest thing ever. Seeing the yield continue to drop in the face of Fed not really suggesting that it's going to do so. Another one of these interesting dichotomies that's taking place. But it also makes for a good trade because we know that as disproportionately out of control this gets, it will have to unwind itself back into, particularly if the Fed doesn't do any of the softening that is being projected. And just doesn't appear to be any reason the Fed's going to change course like that. If things really got sour fast, then potentially, but that hasn't happened yet. And so, they're pricing 6, 8 months. And what if that's really too far for guesstimation as to exactly what's going to take place? Either way, they'll have to figure that one out without any question. From an oil standpoint, we're still ebbing back up, and it's that slow creep. And it's not that there isn't supply, it's just the expectation is that demand is going to outstrip supply that exists. And that's an interesting question. Then it's like, well, where's the economic collapse if oil demand is going to be at records? And of course, some have suggested it's China coming back online, but it takes more than just one country to move it that much. I mean, U.S. consumption is significant, but it takes a worldwide growth. From a gold, no question, we knew this one was going to continue its rise, and sure enough, it's going. And I think that's sort of a precursor letting everyone know, okay, the dollar is in some significant trouble. We could see a euro explosion as well if that confidence. I mean, we had the Saudis announcing trade outside of US dollars. And that's the beginning of what some people would call the end, where your reserve status is reduced. Bitcoin just hovering where it is at the current place. We've got a little bit of a soft spot here with magenta dipping below, but you're still cyan under uh, red from a DOC standpoint. So you just may get some backfilling. The 76 would definitely hold in this particular case. And from an ETH standpoint, almost identical. Significant though that when that steel dips below negative 13 and comes back above, you should expect a little bit more of an improvement. So that's worth noting. But we also know there was quite a few serious positive extremes. Nothing suggests that they're ready to fill just yet. In some cases, with these on the daily, it can go on for months and months. But we just wait for the signals, and of course, just as I was doing the video again, this did this to my 5K and 50K charts. It's becoming increasingly frustrating, I can tell you that. But as always, I will update you on the Skype chat if I get anything relevant. Trade well, we'll talk in later.